In this video, I'll discuss Q4 FY25 result and Concall of V2 Retail. So V2 Retail is a value fashion retailer. They are mainly present in the eastern region of India, in Bihar, UP, Odisha, and they are also expanding towards the western India like Punjab, Maharashtra. So that is their geographical presence. They have total 189 stores in total at the end of the FY25, and their ASP, average selling price, is around 300. Bajaj Style Retail also have a ASP of 300. So main PR of V2 Retail is Bajaj Style Retail. Zudio, ASP of Zudio is around 500. So they are catering to the upper middle class, and V2 and Bajaj Style Retail they mostly cater to the lower middle class and middle class kind of customers. So that is the company overview, and let's talk about the Q4 FY25. So their sales grew 68% in the Q4 FY25. They have reported a sales of 500 crore. In Q4 there was a early Eid, so that is one of the effect, because in the last year Eid was in the Q1, but in this year Eid was on March month. So that is the effect all the retailers have got. Like Bajaj Style Retail also reported a higher growth number also. But yeah, V2 Retail now also, if we see Bajaj Style Retail, their geography, they are also Eastern India dominant, and V2 Retail also Eastern India dominant. But yeah, they both have the positive Eid in the Q4. So if we compare the growth number, like V2 grew their revenue by 68%, and Bajaj Style grew their revenue by 54%. So yeah, again, if we see, V2 Retail is higher than Bajaj Style Retail. So that is the most important thing we have to see. Yeah, in Q1 both of them may have some effect, because there will be no Eid compared to the last year. So that effect may be there. Yeah, will be there. That is no maybe, will be there. So that is the thing with the sales growth. But yeah, anyway, V2 Retail is the number one player in the space of value retail. They grew the revenue by 68% in the quarter, in the Q4. And if we break up the revenue growth, their average selling price grew by 17%, 18% in the Q4, and volume wise they grew by 44% in the quarter. So that is a really good number in terms of volume, and ASP also get better year on year. So that is a good thing. And in the whole year, if we see, ASP grew by 13%. So that is also a good number. If you see, volume also grew by 43% in the FY25. Okay, so that is really a good number in terms of volume and ASP, that both of them are growing. And if I talk about the guidance, they last quarter they gave a guidance of 50% for the next 5 to 10 years. So that is a really good guidance. If we see, yeah, I do not know, or no one do not know if they can execute their guidance or not. But in this quarter also they have given a similar type of guidance, and if we see their performance also, they are really doing good in terms of growth. Okay, so we have to track it, that where the growth will go. So that is the matter of tracking the business or the businesses. So that is the thing. So SSSG number also, they reported a SSSG of 24% in the Q4 FY25 and 29% in the FY25. So that is also a very good number, because earlier they gave a guidance of 8 to 10% SSSG number, and as the base will increase, the SSG number will be lower, and maybe in the future, after 2.5 years, 3 years time frame, you can see the SSG number settling in the range of 10-15%. So that is the thing, but their SSG number is really good. If we see Bajaj Style Retail's SSG number is 20%. So in terms of SSG, Retail is ahead, and they are giving a guidance of 8 to 10% SSG number. So that is the thing. And store expansion, they are guiding us for 100 store per year for next 5 years, and they are saying that they might accelerate the store number, new store number in the future also. They will be in the range of 50 to 60% store expansion. Okay, so in this year they opened 72 new stores, which is around 61% store growth in store number, 61% growth in store number in the FY25. So that is a really good number. If you see that last year they have around 110 kind of stores, and they opened 72 per new stores. So, and they are at 190 stores, and they will open 100 stores in the FY26. So the growth also comes out in the range of 50 to 60% if we see. So that is really a good thing that they are expanding very rapidly, and see what the management or the CEO, Mr. Agarwal, is saying, that the expansion they are getting the confidence in expanding from the performance of new stores. They are saying that 2 years back, when the per square feet sales were around 700-650 per month, okay, then the new store was performing around 40 to 45% lower than the old stores. But now when the per square feet sales number is at 1000 per month, their new stores are performing 26% lower than the old stores. So that is the confidence they are getting. Okay, so that is the really good thing. And if we see the capex of new stores, that is around 2.2 crore including inventory, and they are saying that if they can open 100 stores from internal accruals only, they do not need to raise any money for that. So that is also a good thing. But if they accelerate the growth number, the new store opening number, then they might dilute some equity. So that is a possibility, obviously, that the if their new stores performance stay in the range of like 25% lower than the old stores, then they can absolutely accelerate their store openings. So that is the thing. The management is getting the confidence from the performance of the new stores, and new stores are also getting profitable from the first month. So that is also really good thing that the new stores are doing profitability in terms of PAT in the first month only. So that is the also good thing and the really great thing it is for say. And if I talk about the sales per square feet for the year, that is they touch the milestone of 1000 per month, rupees 1000 per month, and they are looking for 1200 in the next 2 to 3 years. And if you see, if they can maintain the triple SG number around 15 to 20%, they can easily touch the 1200 mark in next 2 years. So that is the thing they are talking about. So sales per square feet is one of the most important parameter in retailing, that how you are using your space, how effectively, how efficiently you are using your space. If we see Bajaj Style Retail, they have a sales per square feet of 700. Okay, so in terms of that parameter also, V2 is way ahead, around 50% ahead if we see. So that is also a good thing for V2. And if we talk about the PAT, they grew by 80% in the Q4 FY25, and they registered a profitable PAT for the year. Last year there was a positive PAT number because of the taxes, because of the tax benefit last year, but this year they have really done good in terms of PAT, and in the last quarter they said that they will register a positive PAT in the Q4. So that is a really good thing, and they are also saying that from the next year all the quarters will be PAT positive. So that is also a good thing, that the profitability is picking up in terms in V2. And if we talk about the PAT margin in the year FY25, they have registered a PAT margin of 3.8%, and they are giving a guidance of 4.5%, 4 to 5% PAT in next few years. And if they can get some operating leverage, if they can sustain the triple SG number, then the PAT margin number should be more than that, should be more than 5%. So that is also a good thing, that if SSG can sustain in the level of 15 to 20% level, PAT margin should increase, and they are also saying that they will improve in terms of PAT margin. So that is also a good thing. And in terms of operating leverage, they are saying that if they will get some kind of operating leverage in the next year also. So that is really good. In terms of profitability, V2 is doing really good. If we see Style Bazaar or Bajaj Style Retail, they reported a loss in the quarter because of the winter, because of the higher inventory in the winter season. They have to sell those inventory in discounts. But in terms of V2, their MRP contribution is at 87% in this quarter. So that is really a really good number, that 87% products are selling in the MRP, and so they are getting the higher margin. So that is the thing, that MRP sales contribution tells what? That the demand is good in V2 retail, that they are not stuck in the inventory. So that is the thing with inventory. And if we see inventory days also, they have improved it drastically. Last year it was 131 days, and in FY23 that was 121 days. But in this year the inventory days is at 108 in FY25. So they have really improved the inventory days. It also indicates that the demand in the store is really good, that they do not have to stock their product in the inventory. So that is the thing. And if we talk about the net working capital days also, they have done really well in terms of net working capital, because last year it was 71 days in terms of net working capital days, but in this year they are at 37 days. So that is a really good kind of number and improvement in terms of that also. And why they are getting this? Because one thing they are getting, that before this year their suppliers only supply 40% of goods in on time, but in this year the supplier supplied 70% goods on time. So that is where also B2 Retail is gaining the inventory days, because because of that 40% number, they have to keep inventory for like 15 days for emergency. Okay, but as of now, because the supplier are giving 70% goods on time, so their emergency stocks also they have to store 7 to 10 days emergency stock. So that is the thing they are getting, and they are saying that they will reduce the inventory days by 7 days going forward. So that is where also a really good thing. And if we talk about the ROE number and the store level SSG number, the sales per square feet number also going up. That is why the inventory is lower. And if the sales per square feet number will the number will go up in the future also, then the inventory number should be lower. Okay, so that is the thing. B2 Retail is doing really well, that the net working capital days reducing year by year. Yeah, there may not be a chance further to decrease the number. There is very small gap between the lowest they can get and where they are now. So that is the thing. But yeah, again they have reduced it drastically, because last year that was 71 days and now that is 37 days. So they have reduced it by 50%. Okay, so that is a really good thing in terms of inventory. And because of all of that, if we see the ROE number, they reported a ROE of 24% in FY25. Last year it was 10% in FY24, and this year they are at 24%. So because of all of those growth and the decrease in inventory, decrease in net working capital days, they have able to done a really good ROE, and they may improve the ROE number further towards the 30%. That is the management expectation in terms of ROE. So that is the thing with ROE. And if we talk about the last point about the customer engagement, their repeat customer is at 70% in the old stores. So that is also a very good number, because 70% number is a really good. It also indicates that the customers are liking their products and they are getting the value. That is what customers want in the lower middle class family. So that is the thing. And V2, the management also saying, the CEO also saying that V2 retail do not need to open stores in the middle of the market. They can open the store 1 kilometer from the market also, because as their products are so good that the customers are traveling 1 kilometer. Customers are willing to travel 1 kilometer to get their product, and that is why their rental cost also getting lower. So that is the thing with V2. So that is the really good thing in terms of, if we see the overall performance of V2 in the Q4 or even in the FY25, there is hardly any parameter where they are going in the wrong direction. All of the parameters, if we see, all of them are going in a right direction, in the northward direction. If we see in terms of sales, in terms of PAT, in terms of SSSG number, sales per square feet number, in terms of inventory, net working capital days, in terms of ROE, all of them are going in the northward direction. So that is a really good thing, that the company is doing really good in terms of all the parameters. If we see, there is hardly few companies in the market that I studied till date. They are really, if I remember, one is India Shelter. All the parameters of India Shelter is going upward. One is Sky Gold. One is V2 Retail. These three companies doing really well in terms of all the parameters. They can do well. So that is the thing with them, that they are doing really well. In terms of valuation, V2 Retail is around V2 Retail is trading around 100x P, and if we compare it to Bajaj Style Retail, they are trading around, Bajaj Style Retail is around 130x in terms of P, and Zudio is also, Trent is also around 120x. But if we see their growth rate, they are far less than V2. V2 is growing about 60-70%. Bajaj Style Retail is growing about 50%. Trent is growing about 40% in FY25. But their P is higher. So that is a thing with V2, that there is a room for P expansion. Like V2 Retail can easily trade around 150x. So that is the thing. There is a still very good chance of rating in the PE, and if we see also the growth number, the management is guiding a growth of 50-60%, 40-50% for say, in next 5 to 10 years. If V2 can do it for 5 years only, then also you can see V2's market cap will be around what? Will be around 60-70,000 market cap. So in terms of the investment, if you invest V2 at the level of 2500 also, then also you will get a huge return in next 5 years, if they can manage to grow their numbers according to the guidance. So that is the thing with V2, that I think the valuation of V2 is in the undervalue segment, undervalue zone. If we see, because of the valuation of Bajaj Style Retail, or or Trent. Okay, so that is the thing with V2. So that's it for the video. Thanks for watching.